What's going on, guys? As you can tell by the title of this video, I made $401,000 day trading FOMC, and I did it while on a fucking airplane. So this is going to be a bit of a trade recap, what I would have done differently. Number one, never trade on plane Wi-Fi ever again. You guys will see in some of the screen recordings that I show, because I was screen recording the entire thing. It was around an hour and 30 minutes worth of screen recordings, but I wanted to make sure that you guys got full transparency and literally every single inch of proof possible for this trade, because I knew that it was going to be a crazy freaking trade, because I was planning on risking a lot. I told you guys beforehand that I was planning on risking a lot, so I wanted to make sure that I was able to capture the entire thing. Before we get into this trade recap, if you guys haven't already, guys, I'm doing a 3-day live event for you guys. This isn't no buy my course fucking thing, okay? This is literally just a 3-day live event that I'm doing for every single one of you guys, and it's going to be probably the best piece of content that I've ever put out to the internet. Imagine like the boot camp, but with my updated way of trading, my updated ways of thinking about trading, updated psychology, updated risk management. As you guys know, I trade a lot differently than I did 2 years ago when I made the boot camp. Personally, I would like to say that I'm a far better trader now 2 years later than I was when I made the boot camp, and I know how much you guys love that whole series and that whole YouTube thing that I did. But just being open and honest with you guys, the boot camp is dated, okay? I do not trade the same way. Yes, I use the same concepts. Yes, I am thinking about the markets in the same way, but I'm trading differently. My strategy is different. My confluences that I'm using are different. My mindset is different. There's some days that I'm actually willing to trade on now that previously in the boot camp I said not to trade on. And I think that's where a lot of you guys, kind of get it twisted, where that's the one thing that kind of sucks with YouTube is I'll make a video saying, oh, don't do this, and that video could have been 2 or 3 years ago, and then what do you know, 2 or 3 years go by. Guess what? I'm going to become a better trader. I'm going to become also a better teacher at trading, and maybe I'll look back on that video and be like, damn, I was wrong. There's some things that I looked back on in the boot camp and I'm like, this actually isn't the best way to go about doing these things. And in turn, I want to make an updated version of this for you guys, and that is this 3-day live event. There's going to be a link down in the description for you guys to sign up. It's going to be 3 days. It's going to be live. You guys are going to be able to ask me questions. It's going to be multiple hours per day, and it's going to be over the weekend, so you guys have literally no excuse but to show up. This is happening next weekend, okay? So it starts November 8th, okay? So you guys have 8 days to sign up. I would love for you guys to be there. This is going to be a one-time thing. This isn't going to get re-uploaded to YouTube. It's only for people that are showing up and going to be on time to this, because again, I really just want to make the most of this opportunity to be able to give you guys an updated version of how I'm trading, and then also reward the people that are willing to put the time in, because I'm going to be going in depth on different things that I don't necessarily have time to go into during YouTube videos, that don't necessarily warrant a full YouTube video for it, but are very, very useful, and some things that you guys definitely have to be taking into account when it comes to trading, like psychology stuff, like some confluence stuff, specifically risk management stuff, specifically fundamental news stuff. We'll touch on some of the stuff that I'm going to get into in the combine on like the news stuff today, but there's just like way more information that I have now that sometimes just like gets left out of YouTube videos or doesn't warrant a full YouTube video to get made about it, because one, it'll hurt the YouTube channel by, not getting views and not getting pushed because it's such like a tiny little thing, but also it's something that there's just no reason to make a full YouTube video over such a small concept, but that small concept could be a turning point for you guys' trading, and that's what I'm doing within this 3-day combine. So long story short, 3 days straight, it's live, me teaching you guys. First day is probably going to be like 5 to 6 hours, so you guys are really going to have to lock in. We've spent probably like the last 2 months working on this behind the scenes, and we just started talking about it now. It honestly kind of sucks that we started talking about it now because it's so late and it's so close to the event. I wish I had more time to talk about it and get as many people in here as possible, because I know that this is going to be so great. And I've actually already had people who've gone through the slides and the presentations and all of the content that I'm planning on doing. They were like, bro, holy shit, why haven't you been promoting this more? And I don't know. I've just been so locked in on working on this for you guys, and I haven't been working on promoting it, which kind of fucking sucks. But that being said, if you guys want to sign up to this 3-day live event, it's going to be a link in the description for you guys to sign up to that. Now, let's get into the craziness of yesterday. So there were 3 significant news events that were happening yesterday. First was interest rate decisions. Okay, so we already knew. Now give me 1 second here. I'm going to pull something up. We already knew that interest rates were going to get cut. And you're probably saying, well, how did you know that interest rates were going to get cut? I was using this handy dandy tool called Polymarket. So let me go ahead and pull this up. If you guys don't know what Polymarket is essentially a third-party platform that allows you to try and predict what is going to happen in the world. So again, it's like making predictions. It's prediction markets, okay? So you're making predictions on what is going to happen in the world. And there's a bunch of these things. I don't want to go too deep into it because we're just trying to focus on the trade at hand here. But we can see that it's talking about when will the government shut down, and people are making bets on that. The Fed's decision in December. So this is what I was using to my advantage, but for the Fed's decision in October. Okay, so how did I use this to my advantage? So yesterday, this was saying October. Okay, FOMC and their decisions in October. And this was pretty much a 99% chance that the Fed was going to decrease rates by 25 bips. So you're probably saying, well, how is this random prediction market site giving you alpha on the charts? Well, I'll tell you about it, and I've talked about this on stream before, and I talked about it, I think, in a previous YouTube video, or maybe it was a coaching call in the Blueprint. But regardless, this is such an important tool because we can literally see what the masses are thinking about big decisions that are coming up and see if these big decisions are already getting priced into the market. So yesterday, before we had interest rate decisions like getting announced, there was already a 98% chance that the Fed was going to decrease rates by 25 bips. That means the vast majority of people were already under the assumption that the Fed was going to decrease rates by 25 bips, and it was almost guaranteed that the Fed was going to decrease rates by 25 bips, or at least that's what the mass majority of people were thinking was going to happen into the market. Now, with that being said, if we go into the market and we look at the price action prior to that news event that was supposed to come out, and we look at what happened from Monday, Tuesday, leading up until this Wednesday decision, oh, would you look at that? Markets were pumping. And what do we know what happens typically when the Fed ends up decreasing interest rates? The Fed, when they decrease interest rates, that typically causes the market to go higher because, again, lower interest rates just means bullish economy, right? So we can see that on Monday, we gapped up here and then we started trading higher. Not only did we have interest rates that were going to be affected, but we also had a Federal Chairman Powell's speech, okay? So the first thing that was already getting priced into the market was the fact that, hey, the Fed is probably going to decrease rates, or is more than likely going to decrease rates by 25 bips. Boom. On Monday and on Tuesday, what was everybody doing? They were buying into the news. This is all going to translate into the trade that I took on the plane in a little bit, but this is things that you need to understand so you guys can understand my thought process on this. So again, Monday, Tuesday, people were buying into the news because, again, there was a 98% chance, or at least 98% of the people were under the assumption that, hey, the Fed is going to decrease rates, and this is going to be a bullish catalyst for the market, so that on Wednesday at 2 p.m. Eastern time, when this news hits the market, people are already knowing what that news is going to be. The second news catalyst that we had on Wednesday was Federal Chairman Powell. He was speaking 30 minutes after the Fed's interest rate decision, which came out at 2 p.m. So Federal Chairman Powell was getting on stage at 2:30 p.m. after interest rate decisions at 2 p.m. And then the last big thing in the market was earnings. Okay, we had Google, Meta, and Microsoft all have their earnings. Meta actually did not end up beating their earnings. Google ended up beating their earnings, as we can see, gapped up massively this morning. And Microsoft, Microsoft beat their earnings but ended up trading down. Now, again, Polymarket, they have something here for this, which is earnings. We can click on this tab. And again, we can see if we scroll through here. So previously on Wednesday, we had Google, Meta, and Microsoft. So on Wednesday, there was I believe it was like around, all three of these guys pretty much had around an 80% chance of beating their earnings. So on Google, 80% of people were assuming that Google was going to beat their earnings. Google ended up beating their earnings, and then boom, price ended up ripping. Meta, 88% of people were under the assumption that Meta was going to beat its earnings. They didn't beat their earnings, and then price ended up tanking. Microsoft, there was around like a 82% chance that they were going to beat their earnings. They did end up beating their earnings, but even though they beat their earnings, price ended up going down. Now you're probably saying, again, how is this going to be beneficial for us to be able to understand this going into the market? Well, all three of these massive tech stocks that realistically are driving the entire market right now, the vast majority of, just to give you guys perspective, 80% of the stocks in the S&P 500 were down. I think it was either yesterday, and there was only 20% of the stocks. So 80% of the 500 stocks that compile the S&P 500 were red, but the 20% that was green ended up causing the S&P 500 to be up over 1%. So these massive tech stocks, the stocks that are driving the mass majority of the market cap within the S&P 500 and within the NASDAQ, are pretty much the market movers right now. And these three are specifically some of the big ones. So that's why that's important. But on top of that, people were under the assumption, I know today we already know the what had happened to these earnings, but all three of these had an 80% chance, or what 80% of the people were under the assumption that all three of these tech stocks were going to beat their earnings. We can see that that was already priced into the market. So on Monday, what did they do? They gapped up. People were under the assumption that Microsoft was going to beat its earnings, and that people were buying before earnings came out. On Google, people were under the assumption that Google was going to beat its earnings. As we can see from Friday going into Monday, what happened? Price gapped up and people were buying all the way through Monday, Tuesday, and then boom, Wednesday comes out, they beat their earnings by a lot. Boom, price ends up skyrocketing. Meta, people, bro, this is crazy. This is exactly what I'm talking about here. People were under the assumption that Meta was going to beat their earnings. Meta ended up gapping up, but then when Meta loses and ends up losing their earnings, boom, flash fucking crash. And now we're all the way down here, down 12% on the day. And honestly, this is it's a pretty good investment opportunity, but I'm not a financial advisor. I have no clue what I'm fucking talking about. But those, I know I've been rambling, but those were the three big, massive news catalysts that were driving this entire, I guess you could call it, FOMC or whatever trade that I was taking on the plane. So with all of these things taken into account, us already being under the assumption that the Fed was going to cut rates by 25 bips, the vast majority of people thinking that Microsoft, Meta, and Google were going to beat their earnings, and then Federal Chairman Powell speaking at 2:30, that leads us into the long-awaited trade recap. So this is essentially what I was seeing coming into this. So this red line represents when the Fed decided to cut rates, or when the news came out that rate cuts happened at 2 p.m. Nothing happened. Literally nothing happened. There was one tall candle that ended up sweeping out low time frame liquidity right here, but this was not significant. We swept out these highs and then just went sideways. And actually, luckily for me, bro, right when this came out, my phone did not have connection for around 7 minutes. So at around 2:07, I was able to get connection to be able to even see what happened to the market. And I was actually freaking out because I thought I didn't have the chance to be able to trade this. And luckily, we didn't do anything off of it. And again, why did we do nothing? Because of Polymarket, because the vast majority of people, 98% of the people, had already bought into the fact that we were going to get that decision. That decision, everybody knew that that was going to happen. So that decision didn't cause a drastic move. Whereas if we go back and we look at like Meta, for example, people thought they were going to beat their earnings. So what happens when the decision is actually the opposite of what the vast majority of people think? Boom, flash fucking crash, and it's going to cause the market to go crazy. But because people were already buying into this news event and pretty much under the assumption that interest rates were going to get cut, and they already knew what the decision was going to be at 2 p.m., nothing happened. There was no high time frame liquidity sweep, nothing. So that leads me to waiting for Federal Chairman Powell's speech. So Federal Chairman Powell got on the pulpit at 14:30 right here at 2:30, and I had marked out, and I'll go ahead and pop up the screen recording. Again, I'm trying to be as transparent as possible with you guys here. I'm going to pop up the screen recording of me marking out the box here on the S&P 500, and then also me marking out the box here on NASDAQ. Okay, I marked out these levels of consolidation. Okay, I marked out these levels of consolidation because we had, boom, the FOMC decision. Everybody already saw that. And then we were going sideways. We were pretty much creating an area of accumulation before Federal Chairman Powell got on the stage. Federal Chairman Powell gets on the stage on this candle, and then whatever, he says his greetings, and then boom, instantly says something extremely bearish. Now, I marked out this box, and then as you guys will see on the screen recording, I put on two different paths that the chart could go. I put a path that with like the little arrow tool that we would either break out of this box, come up and sweep out these highs and then go lower, or we break out of this box, go down, sweep out the hourly lows over here, and then go higher. Okay. Now, you're probably saying, well, we broke out to the upside and then we went down. Yes, that's true. However, when we broke out to the upside, we didn't take out any of these significant draws on liquidity. We didn't even sweep out FOMC highs. We actually broke to the up, or didn't even break to the upside. It was just like a fake out to the upside. But where did we actually take out significant draws on liquidity? It was to the downside. We took out draws on liquidity down here. We took out draws on liquidity down here. Okay, that is what the sweep was. And that is what I based my trade off of, because I needed a high time frame sweep of liquidity for me to take a trade. So you're probably saying, why didn't you take shorts? Well, initially I wanted to take shorts today because that was my assumption. I thought we were going to come through, sweep out these highs, and then go down and then target the new week opening gap that we had. But that wasn't the case. We ended up making the high time frame sweep to the downside. So as you guys will see in the screen recording when I pop it up, I'm constantly writing, oh, I need these highs to get taken out for me to take profit. Oh, I need these highs, because these were the significant draws on liquidity to the upside after we had taken out the significant draws on liquidity to the downside. So once we ended up moving down, that's when I ended up entering into long positions. Once we broke structure to the upside right here, that's when I started entering into my longs. So that was the first trade that I took. I ended up entering into long positions right here. I entered long right here. I had my stops underneath these lows. Pretty big stop loss, but I wanted to target all of these highs up here. Okay, that was my first trade. And then I'm going to go ahead and pop up the screen recording one more time as we fast forward through time here. I marked out this inverse or potential inverse gap, and I'll again on the screen recording, you will see that I said, if we inverse this gap, I'll enter long again. So we ended up inversing that gap. I went long again right here. Boom. And then I ended up moving my stop loss underneath these lows, and then moving my stop loss from these lows down to these lows, because we ended up making a 5-minute retrace. Let me go over how I exited this trade first. So we have two entries right here with our stops now underneath these lows. We have one entry right up here with my stops underneath these lows. At this point in time, we were kind of going sideways. I knew that I wanted these highs. I kept squiggling my freaking cursor over it. I'll pop up the screen recording of me saying, I need these highs. I need these highs. That was my overall target for the day. I wanted these highs to get taken out. That's why I have this green box here. I wanted those highs to get taken out. Okay. And the entire time I was like, this looks great. We took out the high time frame draws on liquidity to the downside. We broke out of it. Things are looking good. This is exactly what I expected. We get this inverse gap here. However, I got super fucking spooked because we ended up making a 5-minute bearish SMT divergence from these highs to these highs, while on the S&P 500 we had these equal highs right here down to, bro, and I'm so fucking good at this, dude. I'm so nasty. Down to these highs. when that SMT divergence was formed, and when, notice I still have this marked out. I made sure to keep the majority of my drawings on here just so it was easier for me to remember. But once we made this SMT bearish SMT divergence, and once we inverse this gap on the S&P 500, so at 1528, I closed out of that first trade on NASDAQ. Okay, I closed out of that first trade on NASDAQ, and that trade, I really did not make that much money on that trade. I was only able to make around $32,000. So as you can see, so I ended up closing all three of those positions. So the two entries right here, and then the one entry right here on this candle right here. So this entry, I ended up losing money because I was in drawdown. I probably ended up closing down here, but both of these entries, I was in profit. So I ended up making a small amount when off of this. Now, on to the next thing that you guys will notice in the screen recording. I actually pre-predicted this bullish SMT forming. Now, I was spooked of the bearish SMT. I wanted to get out with some profit and then just reevaluate everything that was going on. So after that bearish SMT, I still wanted those highs. And I wanted those highs even more because the S&P 500 now had equal highs on the 5-minute time frame, and then also low resistance highs on the 5-minute time frame. And then what did I notice? I saw the S&P 500 come down, sweep out these 5-minute lows, and then make lower lows, while on NASDAQ, we did not sweep out those lows, in turn making a 5-minute SMT divergence, okay? We ended up making a 5-minute SMT divergence. So these were the lows that swept out these lows on ES, and we made this 5-minute SMT divergence. Again, I'm going to pop up the screen recording of me writing out possible SMT divergence if ES sweeps out these lows on my trading view while I was on the plane, predicting that this would happen. I thought it was going to happen on this move down, but it actually happened on this move down. But regardless, I was still able to predict that there was going to be an SMT divergence off of these lows. Now, once we created that SMT divergence, bro, this is when I went right back in. So once we broke structure to the upside on this candle right here, boom, max longs again. I ended up taking 3 long positions with my stops underneath these lows, with my targets being these highs. Okay, I entered into 3 long positions right here, with my stops being underneath these lows and my target being these highs up here. And then the rest is really history because we had that 5-minute SMT divergence. The entire time, I really wanted these highs, really freaking bad. We ended up getting them. And actually, bro, funny enough, I was panicking because price came up right here. I'll show the screen recording of it. Price came up right here, swept out these highs, and after we swept out those highs, I was like, fuck, we started making candlesticks down and ES didn't sweep out these highs. And I was like, oh no, it's an SMT divergence. It's a bearish SMT divergence. These are the only highs that we're going to take out. Price is going to actually end up going down now. And I didn't have fucking connection. I was trying to close my trade out right here and I didn't have connection for like 3 or like 2 minutes. And so I'm just watching and waiting, and then I finally get connection back on this candle, and I'm like, bro, now like I don't want to close because I'm so much lower from my take profit point. So I was like, fuck it. These high time frame highs haven't been taken out. These FOMC data highs haven't been taken out yet. I'm just going to sit here and hold. And then price ends up ripping up, hitting these highs, and then once we hit these highs, again, I'm fucking panicking. I'll show the screen recording. My trade locker isn't reloading. I don't have Wi-Fi. I'm reloading. And then while this is happening, I'm trying to close out my trade. And then price ends up ripping all the way up here, hitting full take profit. And I'm actually able to close all the way up here and like top ticking it. And then as we can see, right after that, price ends up dumping down. Respectfully, I got really fucking lucky with that exit. I probably should not have made as much money as I did on this trade by being able to get out up here when I did, but shout out to Delta Wi-Fi when they ended up working. I'm never going to trade on a fucking plane again. And that pretty much gives you guys the full entire trade recap of how I made $401,000 on FOMC. I'm going to pull up my TradeZella here now for you guys so you guys can see both of the trades that I took. It's going to be split up into multiple positions, but you guys will be able to see what I'm talking about here. Let me just get signed in. So this was the trading day, October 29th. All right, so these were the 6 positions that I took, as you guys can see. So this was the losing trade that I mentioned. Both of these were the winning trades that I mentioned. TradeZella factors in fees included, so it's a little bit different numbers than what gets shown on my trade locker, but it's the same. It's just the fees included. So if you look in the top right hand corner, if you guys saw my Instagram story, you guys will see like the fees and shit, and you can just add that or subtract the fees from the overall balance. But anyways, yeah, the loss that I took, it was around $30,000. The 2 wins that I took, it was around $25,000 and then $35,000. So giving me around like a, whatever that is, like a 32K win-ish, right? Or less. No, like a $30,000 win. And then this was the last trade. 3 positions all ended up hitting full take profit. I wonder if there's, and then, okay, overall on the month, still down $26,000, but it's a much better way to close out October than how it was looking previously. Again, hey man, I guess maybe I should just start trading FOMC every single time because I'm 2 for 2 now. But I'm not gonna lie, like last FOMC I came in with a plan. This FOMC, as I showed you guys, like I came in with a plan. I was using the data from Polymarket. I was looking at people pricing in the Fed's interest rate decisions. I was looking at people pricing in the earnings decisions, and all of those things went into the trade that I took. It wasn't just, you know, willy-nilly see what is going to happen. But yeah, guys, that pretty much sums up how my trading day went. I'll try and get this uploaded as soon as possible for you guys. And yeah, hopefully you guys enjoyed this video. This was crazy trading day. If you guys haven't signed up to the 3-day live event, do it. There's a link in the description. That being said, I love and appreciate you boys. Peace.